I don't know what to make out of this first clip, except that the areas they're talking about, and you'll see what I mean especially if you live in Sydney, are the areas where most people don't really want to live. So whether it's all true or not, probably is, but you'll see what I mean. But the second clip, I'm going to show you the second clip from ABC News, Business News, where I am going to show you why cutting interest rates, when the Reserve Bank of Australia cut interest rates, not if, but when, that will cause the housing market to actually fall further.
In a buyer's market, this 4-bedroom, 600 square metre home at Emerton is snapped up for just
$350,500 once, at $350,500, ladies and gentlemen, twice,
and sold.
That's very good for a house in Sydney with 4 bedrooms, and you can catch a bus or you can drive your car for 2 or 3 minutes to the shops.
Now it's becoming more possible, so it's a really inspirational.
Sydney's property price plunge has opened up a host of bargain suburbs where median costs have sunk well below the $500,000 barrier. CoreLogic data shows the cheapest deals right now on homes in Greater Sydney are in the Blacktown area. Tregear tops the list with an average price below $438,000, followed by Shalvey, Emerton, Darrick and Lethbridge Park. The most affordable units are spread across Fairfield, Campbelltown and Blacktown. The best prices in Carramar, just below $335,000.
Prices have come back a little bit with the recent downturn in the Sydney market, and obviously with all the infrastructure in the area, it's an awesome area to buy in.
$400K or $350K for this area, for people affordability, perfect.
The fall's in part the result of banks tightening up their lending and pushing out investors.
The restrictive lending has had the investors step back from the marketplace, which does allow first home buyers the opportunity to come in and purchase a home.
And data from Domain shows buyers also have more options to choose from, with more than 43,000 properties on the market right now, compared with just 40,000 listed for sale at the same time last year. Alice Monfries, 9 News.
An awesome area to buy in.
$400K or $350K for this area, for people affordability, perfect.
Best to listen to the real estate agent as to whether it's a good time or area to buy, right? Never ask a barber if you need a haircut, right?
Awesome area to buy in.
$400K.
Okay, so here's the clip that I mentioned earlier that I'm going to play for you, and I'm going to see if you can spot why I think, and you might think the same, the property prices are going to fall further because of Reserve Bank cutting interest rates. So here it is.
Why the RBA could pull the trigger on a rate cut, and when's the best time to lock in your loan. And to fix or not to fix? That's the question for investors and would-be borrowers. But with fixed home loan rates lower than they've ever been, some people are still holding off, hoping for a move down in official rates. As we reported last week, there's a clue in the Reserve Bank's latest comments, which suggest another rate cut could be on the cards if the jobs market turns down. Stephanie Chalmers has this story.
$2,020,000. As the long weekend kicked off, there was little sign of the property market slowdown at this auction.
We've had 76 groups through in 3 weeks. Really good numbers.
Ma'am, I'd go straight to 2.1.
There was plenty of interest in this property on Sydney's North Shore.
We have 3 in the play,
which eventually sold for $110,000 above reserve.
Selling. Sold.
4 bedrooms, 2 bathrooms in a sought-after suburb, but those aren't the only attractive features for buyers. There's been a dramatic slide in house prices and home loan rates are heading lower.
And that is interest rate is a key factor to affecting lots of people, and especially the investors.
Last year saw banks and smaller lenders hike variable home loan rates out of cycle with the official cash rate as funding costs rose. But now things are going in the other direction.
We've seen the overseas funding pressures easing for the banks. They've also got an eye on the fact that there may be another rate cut coming up in the future.
Since the 1st of January, 44 lenders have dropped rates on more than 500 fixed home loans, including NAB, Westpac and Commonwealth Bank.
We're seeing fixed rates from as low as 3.49% for 3 years. There is heaps of competition. The banks are really hungry for new business and they're slashing rates to try and get people in the door.
However, some would-be borrowers are still sitting on their hands. According to approval data from Mortgage Choice, demand for fixed-rate home loans fell last month, down by 1.4%. Borrowers are perhaps holding off. Amid mounting speculation, the Reserve Bank will cut and put further downward pressure on home loan rates. The market is pricing in a 25 basis point cut to the cash rate later this year. So what will it take to make those expectations a reality? The Reserve Bank says it all hinges on unemployment and inflation. At its meeting this month, the RBA board explicitly discussed the scenario that could prompt it to pull the trigger, saying if inflation does not move any higher and unemployment trends up, a cut would likely be appropriate. Data last week showed the unemployment rate edging higher to 5% in March, but jobs growth remained strong.
The RBA needs to be a forward-looking institution on the economy, and in the past we've always seen the move before changes in the unemployment rate are really drastic. So I think if you do see that move even from 5 to 5.2%, then that would be a signal for the RBA to cut.
AMP economists are forecasting 2 cuts to the cash rate by year end, and they think it's the housing market that will prove the swing factor. They expect national prices to fall by another 8 to 10%.
And that weakness in the housing market will translate through to the consumer and then to the labour market as well, and that's what we don't think the RBA is anticipating at this stage.
However, after this successful sale on Sydney's North Shore, there was optimism in the air.
Buyers are playing their part and vendors are meeting the market. There are sales.
And whether the Reserve Bank delivers a rate cut sooner or later, there are already some competitive deals for borrowers.
If you're somebody who likes the certainty of knowing exactly how much your repayments are going to be every month, then now probably wouldn't be the silliest time to consider fixing.
To fix or not to fix, the question for borrowers as they keep one eye on the Reserve Bank.
Stephanie.
Okay, before I reveal why I think the house prices will fall further because of a Reserve Bank anticipating cutting interest rates at least once, if not twice this year, here are a few clues.
But with fixed home loan rates lower than they've ever been, some people are still holding off, hoping for a move down in official rates.
However, some would-be borrowers are still sitting on their hands. According to approval data from Mortgage Choice, demand for fixed-rate home loans fell last month, down by 1.4%. Borrowers are perhaps holding off. Amid mounting speculation, the Reserve Bank will cut and put further downward pressure on home loan rates. The market is pricing in a 25 basis point cut to the cash rate later this year. So what will it take to make those expectations a reality? The Reserve Bank says it all hinges on unemployment and inflation. Borrowers are perhaps holding off.
Okay, so enough clues, I suppose. That sums it up. The borrowers are holding off. Why are borrowers holding off? This is something I learned from Martin Armstrong of ArmstrongEconomics.com, is that no matter what your interest rates are, if there's no confidence, people will not borrow even at 2 or 3% interest rates because they're not confident. Plus, they expect for these prices to be even lower tomorrow, and they also expect those interest rates to be lower from 3% down to 2.5% tomorrow, so they will be holding off. This is what creates deflation in any asset class. So this is what's happening right now. It's a deflation of housing. It is the falling housing market, falling property market, because again, borrowers, potential buyers think they'll be able to buy it cheaper tomorrow, and they'll also be able to lock in a cheaper interest rate tomorrow on their mortgage. So why buy today? Sit on your hands. This is why Reserve Bank cutting interest rates and announcing that they might be cutting interest rates will make housing fall even further. Thank you for watching as always, and we'll speak again in the next video.